All right, let's talk about using 2 credit cards to cover a mortgage with cash advances. Only paying the APR, the transaction fee, and the ATM fee. I'll show you the math, the pictured graph I'd use, and exactly what comes out of your pocket each month. Assume a $2,000 monthly mortgage. Card A gives me a cash advance, 5% fee, 29.99% APR, and a $5 ATM fee. Day 1, I pull $2,000 from an ATM. I deposit it and pay the mortgage. Costs, month 1, cash advance fee, 5% of $2,000 equals $100. ATM fee, $5, interest. Cash advances accrue daily from day 1. At 29.99% APR, that's about 0.00822 per day. Over 30 days, $2,000 times 0.0822 times 30 is about $49. Out of pocket for that $2,000, roughly $100 plus $5 plus $49 equals $154. Picture this on a graph. Bar 1, mortgage equals $2,000. Bar 2 next to it, fees plus interest equals $154. A thin line rising over 30 days shows the balance growing with daily interest. Think of your out-of-pocket as the reward you pay to float the mortgage with credit cards. $154 in month 1. Now, the 2-card rotation idea says next month, use card B to cash advance enough to pay off card A's statement, and repeat. Let's say card B is a bit better. 3% fee, 25% APR, and a $3 ATM fee. Each month, the credit card pays the card note. Card B covers card A's statement this cycle, then A covers B next cycle. Month 2 on card B for another $2,000 mortgage. Fee, $60. ATM, 3. Interest, 25%. APR is about 0.85 per day. 30 days is about $41. Out of pocket, $60 plus 3 plus $41 equals about $104. On the graph, month 2 fees and interest stack as $104. Add the running total. Month 1 cost approx $154. Month 2 adds about $104, bringing 2-month out of pocket to roughly $258. Then you rotate. Card A, then card B, back to A, each one paying the other's card note monthly. The credit card is paying the card note monthly every month through the cash advance rotation. Side by side, month 1 shows $2,000 next to $154. Month 2 shows $2,000 next to $104. The thin line tracks daily interest over each 30-day window. Your reward, the out-of-pocket to float 2 $2,000 payments, totals about $250 over 2 months. That's fees, ATM charges, and daily interest. What you get is the mortgage paid on time and an extra 30 days of cash flow. Know your APR and fees. Track the daily rate. Keep the rotation tight month to month. Month 1 out of pocket, $154. Month 2, $104. Total, about $258. That's the math behind paying a mortgage with 2 credit cards using cash advances. The out-of-pocket is the price and the reward of the float. If this helped, drop a comment, get free tools from the link in the description, smash that like button and subscribe for more breakdowns.